Good morning, good afternoon, good night, wherever you are. Let's look at our data setup for today, September the 3rd, 2025. So, this morning we had a low that was put in around 2300. So, we were trying to decide if we were going to break that low, basically, is what we were trying to decide. So, if we step over and we set up the day as it is for the overnight, right? We set up what we're looking for here. We have a few things. First of all, let's look at our potential high of days. So it's going to be, this kind of range right here. We'll call it 0.6 to 0.7. And if this is your first time seeing this, we are measuring this from the open, right? 1800 here. So we're going to call that 0.6 to 0.7. So there's our 0.6. And let's draw a high of day box. Call it 0.6 to 0.7. A little bit higher. So now we've got this nailed. So we'll leave that there. Our possibility of low of day 0.4 to 0.5. That does not look like a 0.4 to 0.5 low. No, so we're at 0.36. We're pretty close to 0.4. So that means whether we sweep or not, we can expect it, depending upon the other data, to probably at least try. So that'll be considered our low of day. Our low of day zone. And it's just the initial zone. All right, so if we look back over at this data, we can see that there are other possibilities for highs that get put in, right? And so we're looking at over here the most likely time that the low gets put in is telling us 3 a.m., right? And then the second most likely time is roughly 2230, 2300. So if we flip back over, we look, this low was put in at 2340, so it was around 2300. So it's kind of in between the two times. And we did try to put it in around 3 a.m., right? We kept trying to pull down. We kept attempting to come down during this session to put it in, but we did not. So chances are we're going to try to sweep this. Whether we do or not, we'll see. So let's look at the data. So data told us those were the high of day, low of day possibilities. Now let's go down and let's start looking at other areas. So midnight. So 67.65% chance. So if we're to look here, 67.65% chance to put in the midnight. If we were to look at the settlement, we can look at settlement levels, but we don't really need to worry about those right now. So let's go further down and let's say, so the high is a 94% chance. That's already been hit, right? It already got hit. And that's just the high of this 12-hour range. 87.25% chance to get back to this mid right here. So pretty nice target. I don't hate that. All right, so that's pretty good. Almost a 90% chance to get back to this target. So this is going to tell us that when the volatility comes in, whether we sweep high or low, we're going to try to reach down and grab this. So based on that, we're going to look for that short into the open because there's a possibility we could pop up into this range. But if we look, let's go look at high of day, low of day. So the likely times for the high are at the open. The likely time if we try to put in a new low is going to be at the open, right? So basically what this is telling us, we're most likely going to sweep the high with a potential to try to go sweep that low. That's what this is kind of telling us here. All right. And so, and it's just over time, if you look at this enough, you can kind of get an idea of how this is kind of reading out. So, so let's flip back over and then let's look at this mid right here. See what the data is for that. We call that the London mid. So an 85.29% chance to put that in. All right, so we've got almost a 90% chance, an 87% chance, an 85% chance, and then it starts tailing off at this midnight. So chances are we're going to look to try to get down here ultimately. Now, do we want to hold it that long? Maybe not. If we pull first, chances are we're going to go try to reach this high of day, right? There's this monthly open target. There's just a lot of things for us to go back up here and get. Doesn't mean we will, right? This is just how the market plays out in statistics, right? It doesn't mean anything's going to happen. This is just it's the story we tell ourselves to take our trades, to set up our trades for the day. So let's say we want to take this short into the open. It's 9:20, so we can go ahead and start putting the short in. I'm hoping, I don't remember if we popped. I'm hoping we pop higher. That way this is considered a bit of a meh entry. That way we can add to it if we push up into the high of day. I don't think we popped into the high of day at the open though. So we'll just grab a sell here, right? And so typically what we would want is one of two things. We could take our target here, right here around the mid, excuse me, or we could take one knowing that we're going to go possibly reach for this high of day. Now, do we want to sit into that and add up there? Not really. Right? I don't even know if I would hold to that to try to add to it to get this. I might get stopped out and then just re-enter if we pop. And it might just be a red day. Who knows? So this is how the market works sometimes. You know, sometimes you're the windshield, sometimes you're the bug, as they say. So as we start to move through this, I can't think of anything else. I mean, we can go look at like price model clouds and stuff that, you know, we've got in this database that kind of tell us that, you know, most likely into the open, we're going to pull, right? So this is telling us that most likely we're going to pull and we're going to push through, you know, roughly 11 o'clock or so. And then this is 0.15 and I don't know. We'll see what happens, because if we can get down there to this broken status, it'll change the data a little bit. But this is basically telling us that we're not going to go sweep the low, right? This is telling us we're going to pull at some point, but we're not going to sweep the low today. All right. So let's see how accurate this is. We've got, are we on the right screen? Yeah, we're on the right screen here. So let's zoom in a bit so we can see this. All right. So we're going to look to take that at this mid. So this is going to be, it's 438. And we've got down to 72. So that's going to be what, 50 handles, give or take? Something like that. All right, so we're starting to pull into the open. There's our first pull. Now, this can be a bit scary. And again, you'll hear me say this over and over. Where do we want to reject? We want to reject this candle. We really don't want to push too far through that. We don't even really want to get to the upside of it yet. Not until we get our target. To get into it is okay. There we go. Well, those are, what are these, 5-minute candles? Oh, that's why it went so fast. But to get into it is okay. You just want to reject this range, right? This is where the money comes in at the open. Kind of sets the tone, right? So this kind of sets our equilibrium. And so when we trade, we'll come back into it and we'll find resistance and we'll get above it and use it as support. So there's our first trade. Now let's see where our highs of days and lows of days and all that end up here. So let's go. So we're trying to see, we're using this as resistance still, right? Now we get to the top of it. So we keep going. Yeah, see, this is why I like to trade the open. That would have been a rough to sit through here. Would have been very rough to sit through. All right, let's see. So there's our high of day zone. We've gotten into it. So if we were to try to short, we would want to short here, and we do not really want to get too far into or above these deviation areas up here. So, and I didn't take this second short, but let's just say we were to sell here. Where's our target? Well, we know that our target is down here, right? If we're really thinking this is going to come down, our target's going to be down here. Where's our stop? Well, we're going to look to get out. If we start holding and really driving out into this range up here, we don't want to sit in this. All right, we got really good resistance here. Now, what we don't want is to use this as support. We want to get through the other side. That's nice. Now we see which way we go. We know we have these low side targets. That's a bit scary, huh? Yeah, so there's your low side target. I don't know what that is. Oh, that's a ridiculous trade. 69.30, almost $7,000. Yeah. So, yeah, not too bad. Um, yeah, it's pretty accurate so far. Do we get to midnight? Let's see if we actually get this other target. A little bit less probability, but we did. Yeah, we got to midnight as well. So this is how data can help, right? I like taking trades at the open because I like the quick trades. I like the volatility. And it doesn't mean I don't take larger trades throughout the day, especially if we miss targets. Sometimes if we reach them and get really close, I'm not interested in coming back to those targets. So some other ways that we can actually look, we can actually look and see, should we stay in the trade? Should we exit the trade? So one of the things that we have as part of our tool set is we have this. Now this is going to look ridiculous because there's a lot going on here. So let's see if I can actually take out. It's not going to work. All right, whatever. So what we look for, and we'll go back to 5-minute. Why not? Because I like 5-minute candles better, just because I tend to like the setups on 5-minute candles. But what we look for, these blue boxes that we're looking at, these blue boxes are what we call like 5 to 9 boxes. So what these are, it's the second 5-minute candle inside of an hour. So the second 5-minute candle inside of an hour, we put a box around it and we use it as support or resistance. So, and we only use it for support or resistance typically for that hour. Now, if we have a bigger setup we're looking for, we can look for a continuation setup and all that, right? And if you notice, the reason they seem to be very important is because they do get used as support and resistance. All right. So we tend to trade in and around them. So what we look for a trade down, we want to look for a couple of things at the end of 1 hour, which is here, right? At the end of this hour, we want to look for an attempt to sweep, or we want to look for a pop near the end of that hour. And the reason for that is we break these hours down into quarters. So in that last quarter, or at the end into the next hour, we want to see the high get put in here, or we want to see the high get put in here. And so in this next hour, we want to see this used as resistance. So once this second candle gets put in, right, this is where we want to, if we're in this short from the high of day, we want to see this hold. We might try to pop through the other side of it. We might try to go take out the high of that previous hour, because that happens. This is why when we break that rule, we start looking up here. Okay, what's our deviation? So then we use this box, right? Now we use it as resistance to come down to our target, right? And where's our target? Right, we know our target's down here. So now, does it always work? No, nothing in trading always works. But it's one of those things that kind of tell us the market is doing what it is supposed to do, right? So we get into this next hour, right? Here's the previous hour. Here's the hour that follows. And we put in our high. It's not quite at 15-minute in the first quarter. It's just barely into that 20-minute candle, right? We get our high, we get our open, get our high, and then we pull back down. So now we're going to start using this as resistance, right? Now we're driving back in again. Unfortunately, we had to wait for the same thing. We had to wait for that first 15 minutes of even the next hour to set up this short and use this as resistance on the way down. So it's another tool that we have. There's a handful of tools that we use that are, come as part of this database. We also have an auto mapping tool that shows some other ranges, some high of day, low of day ranges and stuff too. But, won't get too much into that right now. But yeah, this just another day of walking through how we can use data to help support any ideas that we might have. And so for me, if I'm looking to finish off some pattern or whatever the case may be, I'm just going to look at this right here. I'm going to say this is going to bounce right here at this 886, or we're going to squeeze out this 113, which is actually a perfect target because it gives us our actual low of day zone where this didn't quite make it. So the idea is that if we can pull down through this, it'll get our low of day, and it also satisfies the requirements for this harmonic pattern that's setting up here. And we'll see what it satisfies for this one. This particular one. Oh no, this particular pattern as well. So yeah, it solves two patterns. I don't know if you know much about harmonics, and if you don't, that's fine. But basically we've got this pattern setting up right here, which is considered a deep crab. And then we've got this bigger pattern, which is considered to be a shark. So if we pull to that 113, 23,279 is the ultimate target. If we get into that, that would solve the closure of both of those patterns. And so then we could decide, are we going to bounce to that 50%, come back up? And if so, great. If not, typically after we complete this setup right here, if we sit in here and we come back down and get this 113, we would look for a retrace up into about here probably. Let's see, let's measure this. I mean, I'm going pretty far beyond the scope of what this video was supposed to be. I would say right up in here, 23,400 back into this 930 range of 23,430, give or take. And so the reason we do that is because this pattern will then do one of two things. It'll continue out through the other side, or you'll find resistance there, and then we will drive back down to a deeper setup to the low side. And that setup would take you to, we'll call it 23,176. So, outside of just using a database, these are other strategies that we use to kind of set up trades. But anyway, hope everybody did well. I went a little bit beyond the scope of what I meant to for this video. I will see everybody next time.